the purpose of the webinar, Kev, what we're covering is basically how you as an individual buyer can compete with private equity. And what we're going to kind of cover today is both going through kind of the proprietary process of finding a business and not having to be reliant on all the business broker websites, BizBuySell, LoopNet, and all the other ones out there. And then also kind of how the SBA financing process ultimately weaves into this. So the start of the webinar, Kev, Sam and I will both give our backgrounds and just kind of cover how we got into our respective industries, and then we'll kind of weave into what we do. So just to kick things off here, and I'll keep adding people as they come in. So Sam is the director of buy-side advisory based in Grand Rapids, Michigan. So he leads that team at Calder Capital. And basically what he does is he kind of helps with, or Sam, if you want to give your background, sorry, I'll let you
Yeah,
go ahead.
yeah. No, appreciate that, Matthias. So, yes, as Matthias said, my name is Sam Scharich. I am blessed to lead our buy side team. I have been with Calder for about 7.5 years. I actually was an intern when I first started, so I got to do all the grunt work one can imagine, and really learn from the bottom up in many different roles, both seeing some action on the sell side as well as on, of course, eventually the buy side here. I've really been leading the buy side team for the last about 5 years. And when we started the buy side division, or when I started leading the buy side division 5 years ago, yeah, we only had 5 clients and a handful of people on the team. And we're blessed today to be at over 50 different searches that we're working on. A lot of those searches are individual buyers or small investment groups. And we're blessed to have helped almost 30 people in the last, helped close almost 30 transactions in the last 2 or 3 years. So far, year to date, we have closed 8 different buy-side transactions, have a couple more closing. I'm knocking on some wood here today, before the end of the month. Yeah, excited to be chatting with everyone today about really how individual buyers can compete in this very competitive landscape of M&A.
Awesome. And just to give my background here, so Matthias Smith with Pioneer Capital Advisory. I lead a team of 6 people helping business buyers go through the SBA financing process and basically kind of helping to solve for the problem of what bank or what banks do you put your deal in front of at the point in time that you have a deal under LOI, and how do you get the deal financed as fast as possible with the best credit terms so that you don't have to kind of go through the process of knocking on doors with all these different banks one by one. So just to get things started here, I'll just kind of go to the next slide. If Sam, if you like, have covered this here.
Yeah, absolutely. So a couple things we're going to be touching on today. We want to give a quick background on both Calder and Pioneer, just so everyone completely understands where we're coming from. Want to cover a couple issues, a couple hurdles that we see in almost every individual buyer search today. Of course, want to then follow that up with some of the solutions. This is not an easy thing to do. It's fun to talk about. It's easy to outline the process at a high level. It's hard to execute because it is, as we'll talk about in more detail later, it's like dating, right? You don't know, nobody bats 1,000. And then finally, we're going to give you an example at the very end of a case study example of a buyer that worked with both Calder and Pioneer, and eventually got a closing across the table that he was extremely grateful and excited about. We're going to keep his details confidential. We won't provide any identifying information, but we're going to go in depth on that. And then at the end, please write down any questions. If you want to throw them in the chat as we go along, that'd be fine too. But we're going to wait till the end to really start answering a bunch of questions. But we'd love to, of course, tailor anything according to what people want to hear. So that's what we're going to be covering today.
Awesome. Thank you, Sam. So just kind of going to the next slide here. So that this kind of also covers Calder as well.
Yes, yeah, absolutely. So little background on Calder. Calder was founded in 2013 by our current owner, founder, managing partner named Max Fryer. Kind of a funny story how Max got into M&A. Max got into M&A in the early 2000s purely because he was willing to cold call. So he joined a local M&A firm in Grand Rapids at that time and cold called and actually became one of the biggest rainmakers on their team in terms of signing on new clients and actually getting those. At that point, it was mostly sell side focused, getting those sellers sold. That is Max is our leader. Max has instilled that same work ethic and hard-nosed prospecting drive into our entire team. So today, since founding Calder in 2013, Calder has grown every single year. We've added to our team. We've done more deals. We've grown the buy side as well as the sell side. We've done deals in many, many, many different states. We've closed deals in over 30 different states, tons and tons of different industries. By virtue of being headquartered in Michigan and having a lot of boots on the ground east of the Mississippi, we see a lot of manufacturing, distribution, business service, specialty contracting, or what we call construction deals. But by no means are we limited to those spaces. We have many searches, even today, ongoing and outside of those spaces, such as healthcare or tech or other more niche areas, and have searches even going in Mexico and Canada. So we are not at all limited to just the United States. Today, Calder in its entirety, both buy and sell side, has about 55, almost actually, I think we're almost up to 60 full-time people on the team. The way that that's broken down, about 25, 30 of those are advisors that work on both sell side and buy side deals. And sell side just means we're working for the seller, representing the seller, and our fiduciary duty is to get the best deal, price, terms, and fit for that seller. And buy side, obviously, we're working for the buyer, and our goal there is to find the right companies on an off-market basis. We'll talk a little bit more about the importance of why off-market in a minute, but we're working in the interest of the buyer to get the best price, best fit, best terms on an off-market basis. Again, those 25, 30 advisors, they only work on buy and sell deals. They only work on handful, maybe 4, 5, 6 deals a year. So every single project they work on means a ton to them. A lot of the deals we do tend to be, if you think of it from an EBITDA perspective, $500,000 to 10 million in EBITDA. But by no means, again, are we constrained there. That's just where the majority are. We've certainly done smaller deals. We've certainly done larger deals. A lot of the buyers that engage us on the buy side, they're interested in, 500,000 or $1 million plus EBITDA deals. And a lot of the individuals, they tend to be a little bit more open on the type of business, but often are pretty constrained geographically, meaning they'll give us a radius of, hey, I want to stay within an hour drive, my primary residence. I'm not looking to move the family across the nation, right? So, but going back to Calder, we're about 55 strong. The buy side team is almost 20 of that 50. As you can see, we've closed almost 30 deals in the last 3 years. Every year we seem to close more buy side deals. That's contributed to almost 160 million in total deal value. Our team has boots on the ground throughout the Midwest and has continued expanding. In the last year, we've moved into Nashville, Naples, Austin, Pittsburgh. And again, even if we don't have boots on the ground, we have closed deals in over 30 different states. Some of those we've never been to the business. It's really the process that we follow that has allowed us to be successful. Part of our buy side offering is full service. So I focused a lot so far on leads, and yes, there is a huge amount of effort and value that goes into finding off-market leads. But most of our clients want us to then assist every step of the way after the introduction, which would entail doing evaluation, helping strategize on where to start and how to structure an offer, negotiating on behalf of our client. There's certainly a lot of educating the seller to do because these sellers are off market and rarely have a broker or any other buyer at the table. So there's a lot of educating the seller on, hey, this is what to expect. This is the normal timeline. This is a fair deal. Here are some industry multiples and data that support that. A huge other point about our buy side is that we will guarantee a certain number of leads. Certainly, the measuring success and engagement is not defined by hitting that number of guaranteed leads. Success is defined by getting a deal done, right? But we offer a guarantee because we want clients to know if they engage us, they're not going to engage us and invest in this process and have absolutely nothing to show for it. There is a bare minimum threshold that our team has to deliver. And if we don't, we end up refunding dollars because again, we stand behind our guarantee. And lastly, this is off market focused. It's not too hard, and frankly, we would not add a lot of value if we were going to biz buy sell or contacting brokers and sending our clients listed deals. Those are extremely picked over. They tend to be few and far between in terms of the good ones. I'm sure you've surfed on biz buy sell and seen all the junk you have to go through. That's again not adding a lot of value. The reason we target off market leads is a couple reasons. One, we want you to be one-on-one with the seller. That gives you an opportunity to build a relationship. It gives you an opportunity to actually get to know the owner and understand the business. I'm sure you've probably been in a point where you're going after a brokered deal and the broker's gatekeeping hard. They might not let you talk to the owner. They probably won't let you see the facility until you've submitted an offer that checks their box, right? How can you ever get to really understand that business well if you're that far out? So this is a relationship driven approach. I often compare it to dating. First, it's always about fit. And then, of course, we try to get to price and terms shortly thereafter. But we don't want you to waste time surfing the internet for listed deals that are probably going to be bid up. If they're even good, they're going to be swamped. Just a little bit of a flip side example. On our sell side, last year, we reset the record 3 times for a single number of offers on a single deal. The latest record is 57 offers on one deal. So that's just, it goes to show a little bit of the intense competition that we get when we list a good business. When you have 57 offers on a business, you probably don't want to be the winner of that deal. So very excited to chat further with you guys. And that's a little bit about Calder.
That's a lot of offers, Sam. 57. Well, no, thanks for giving that overview. So just kind of pivoting here to give an overview of Pioneer Capital Advisor and what me and my team do. So we are a boutique commercial loan brokerage firm or commercial loan consulting firm focused solely on the business buying space, and then more specifically SBA financing. So I started Pioneer back about 3 years ago in May of 2022. Before starting it, I worked in the SBA lending space, specifically in middle office roles. So for just over 7 years and 2 months, worked at 4 different SBA banks, spent half a year working at Live Oak Bank, was at Live Oak in their ETA search fund lending division, and then also kind of worked on upmarket sponsor finance deals as well there in their kind of middle office roles. Was at another bank called Byline Banks, another top 10 SBA bank for 3.5 years, and then 2 different banks here in Wisconsin where I'm based. And essentially, I saw the opportunity with all these sponsors looking to take out SBA financing to buy these businesses. And I came to the conclusion that from an opportunistic standpoint, it made more sense to start a firm to help business buyers go through the SBA financing process instead of working directly at these different banks. And so I lead a team of 6 people, just kind of flipping to this slide here. So it's myself, my chief operating officer, Valerie Sash. So she has about a decade of experience in the SBA space. Then we have 2 people on our sales team, one of whom does both kind of inbound and outbound sales, Raphael. Alan does inbound sales. And then we have 3 people on the credit side, Pablo, who kind of runs our credit operations, and then Fernanda and Ramiro, who work under him. And so we typically get involved in a deal at the point in time that a business buyer has a deal at or close to the LOI stage. And they know basically this is going to be the contemplated purchase price, seller financing amount, and similar. So Sam and I and the Calder team have a couple deals in process now. We've closed a few before. And essentially our kind of strike zone or focal point is anyone looking for SBA financing for $1 million above. We'll go down to $500,000 kind of from the bottom threshold. But that's more of us just kind of pitching deals or putting deals intro directly to banks that we think can do them and not really providing a white glove bespoke service. So what we do basically at the point in time that we decide we're going to work with someone is we'll build out a full credit deck that basically has a profile in the deal, industry of the business, backer of the buyer, discussing the connection between the two, and then putting together basically a source and use cash flow model, management overview, everything that the bank will ultimately want to see to decide, is this a deal in the buyer that we feel comfortable financing to help get term sheets faster, more efficiently from the banks that the deals ultimately get be a fit for. And so in the last 2 years and 11 months, soon to be 3 years, we've helped 84 business buyers go through the SBA financing process from start to finish in industries ranging from e-commerce, aphrodisiac, sex chocolates to commercial roofing and everything in between. And these are just a couple of examples of various transactions here. So I'll hand the baton back to Sam to go over this slide here.
That is quite an array of industries, Matthias. That is interesting.
And chocolates.
There's certainly that's one of the joys of working in this small business space. You learn new businesses that you didn't even think you wouldn't even know existed, and fascinating to interact with different owners. But look, there are a lot of challenges that buyers face today. One of the biggest that I hear from almost every buyer is, I don't have enough good deals to look at. Again, it's one thing to go online, look at BizBuySell, look at BizQuest, look at other listing sites, or to reach out to a bunch of brokers. It's not a bad starting point, but quickly you run through everything that's good and quality. And like I said, a lot of the quality deals are picked over or are bid up quite a bit. So the question becomes, how do you find more of the high quality deals that are actually of interest to you? We'll be talking about a solution to that today. Furthermore, when you actually find a good quality deal, all right, how do you compete on it? Because there's probably a bunch of other people talking to that owner. Again, even whether it's listed or not, there is so much competition on this deal. There's so much direct outreach to owners in very competitive spaces. As an example, HVAC. I think every HVAC company in the United States has probably been contacted 20 times this week by every private equity group in the nation. So again, it's extremely hard. And the question becomes, how do you differentiate yourself from those buyers? We'll tell you exactly how Calder separates our buyers in just a second. And then lastly, deal complexity. All right, let's say you've solved the first two. You've got a good deal. You've got the owner's attention. You're ready to write an offer. How should you structure that deal? Where should you start with an offer? There's a lot that goes into thinking a few steps ahead. This is not checkers. This is definitely chess. And you got to be thinking a couple steps ahead, because not a lot of owners are going to take the first or even the second offer. They're going to want to negotiate. They're going to want to feel like they've won a little bit psychologically. And honestly, the best deals don't make it to market. The best deals get swooped up before they make it to market. And usually it takes a proactive approach to get in front of a lot of the better deals. So Matthias, anything you'd want to add on challenges buyers are facing today?
Yeah, so I would say one thing, Sam, when you as a buyer kept going through a broker deal process, one of the biggest challenges is how much data and information can you get from a diligence standpoint pre-LOI before you really start spending dollars with financial due diligence to get quality of earnings report, M&A legal, and similar. And my experience has been that, to Sam's point earlier from a few slides ago, many brokers typically gatekeep information. And some of that, candidly, is for good reasons. So, like in the last 3 to 4 years, the ETA space and business buying space, especially kind of in this pocket of the market, with folks that I work with looking to use SBA financing, has really exploded. And so with that, it's brought all different types of buyers, from people that have $5,000 at the bank that don't have any kind of remote chance of being financially qualified, to super financially qualified people. And so to the extent that you can reduce the amount of competition that you're competing with, it gives you an upper hand from a negotiation standpoint, and really being able to have a high quality conversation and getting the information that you actually need easily with minimal friction to be able to make an intelligent valuation decision. That's what I have to add, Sam.
No, that's spot on. I can't agree more. So look, some solutions to these challenges, and we're going to dive deeper into each one of these solutions. They're pretty common sense solutions, but when you think about actually executing on them, they get a little bit more tricky. The first solution is, again, limited deal flow of actual good quality deals. Whether you do this yourself or you consider the option of working with a team and outsourcing some of this work to a team like Calder, you got to be going direct to owners. You got to run a proprietary search. Again, it's just extremely unlikely if this is something that you're doing alongside your day job and all you're doing is flipping on broker deals online on BizBuySell. Look, you may have a shot, but the likelihood of success is very, very, very low, and it's probably going to take years and years. We have lots of buyers that come to us and say, I've been searching for 2 or 3 years, and they describe exactly how they're searching, just as I did. And of course, it's not going to be a very high success rate when you go that route. So running a proprietary search means going off market. It means reaching out to owners directly with a strong message, with conviction that, hey, I am interested in your business and we should be talking one-on-one. And of course, it's important to get there one-on-one. It's important to get there before they are talking to anyone else or before they've engaged a broker. There's a couple value adds, reasons that you can incentivize them to maintain that conversation as a one-on-one conversation rather than deciding to go talk to a broker or go talk with other buyers. Secondly, competition, which is a huge challenge. It really comes down to having a well-prepared deal team, being extremely, extremely well-prepared and ready to move quickly. It comes down to being personal. That's how you differentiate. Everyone says we're different and then often gives the exact same spiel. And I've been on plenty of calls. This is a great area where you can differentiate yourself from private equity, or they get on an introductory call with an owner and in the first 20 minutes is all about them. The truth is it's about the seller. It's just like when you get asked, I don't know if anyone here has been asked the age-old question of, hey, sell me this pen. The right answer isn't to start selling the pen. It's to ask, who am I talking to, and try to understand why they might be interested in the pen in the first place. It's the same thing here. You got to have a personality, but you got to tailor this toward each single owner and seller, potential seller that you're talking to. So being personable, but also when I say personable, it doesn't just mean being unique. It means being genuinely curious and interested about each business and about each seller you're talking to. Again, the dating metaphor or analogy. And then lastly, it's persistence. I'll talk about some statistics in a minute, but if you think, oh, great, I'm going to find one business and make one offer and everything's going to go over well, I'm sorry, you are sadly mistaken. This is something that is going to take several offers. It's probably going to take, I'm skipping ahead here, but it's going to probably take one failed letter of intent. It is going to wear you out and you're going to experience deal fatigue. And so you have to know and be willing to look at, your reason why over and over again to keep driving forward. And then lastly, deal complexity. It's important to work with people that have done it before. Have a deal team, have a trusted M&A advisor, or have a trusted partner that's been through this before, that's helping you think several steps ahead, that is helping you adhere to certain timelines and keep momentum in the deal, and that is helping keep the communication consistent. Because one of the biggest challenges is just making sure the seller keeps their head. I mean, a lot of times when there's uncertainty in a process or things take a little bit longer than maybe was originally expected, sellers begin to think in times of uncertainty, they begin to think of the worst case scenario. Even if there's no reason to think that way, that's the way they think. So it's very important to have the right financing, the right M&A advice, and consistent communication throughout the process. So we'll go to the next slide here and talk a little bit more about how Calder runs the proprietary search. Again, our pitch today isn't that you should engage Calder necessarily. Of course, I'd love you to consider that. But if you don't, I think you could take away some of these things that we do very well. And
one more comment, Sam, just to go back to the slide and everything you say, I think is super valuable. So back to the comment you mentioned about, it's not about you as the buyer, it's really about the seller. The fact of the matter is, so many of these sellers, they're just getting bombarded with people that want to buy their businesses. So the comment you mentioned about like the HVAC owner, you might have 20 people a week. I have friends that have started accounting firms or they've bought accounting companies, and they're constantly just getting emails from searchers. Is if you're the one selling the business, the question's kind of twofold. Is one, like, what amount of proceeds or funds will you get from the buyer? But two, how do you know they're actually going to be a good steward and taking care of your business? And so to the degree that you can really explain that and articulate that well as a buyer, it goes a super long way to getting the seller comfortable with you.
100%. 100%. All right, we'll try to be concise on this. And again, if you think of questions as I'm going through this, please pop them in the chat or write them down. We're excited to answer those once we get through this. But first, off-market deal flow. Where do you start with this? Well, with Calder, a lot of the off-market deal flow comes through direct outreach to a list. And we'll talk about how we do that in a second. But also there's a couple things that we can do beyond just direct outreach. Number one, Calder has built up a CRM database of over 200,000 business owners. And when we have a new buyer that we're working with, the first thing we do is send an email out to all those business owners saying, hey, buyer, we have a buyer looking for XYZ. Right out of the gate, we often get quite a few responses of owners that are interested and we can start qualifying. Number two, having conducted buy-side searches for many, many years, we've built quite a list of what we call pocket sellers. These are owners that we've been in touch with in the past that have said, I do not want to list my business for sale, but if you have a buyer looking for my specific kind of business, I'd be more than happy to chat. So those are two quick hitters right out of the gate that we can do. But again, a lot of the off-market deal flow comes from us building a list. We pay to have access to a couple different databases. We use Data Axle. That's probably one of our best databases that used to be called Reference USA. We also supplement that with some lists from SourceScrub and Grata. We found that there's some unique records on each. So we have a way of pulling the lists and then consolidating from there with a macro. We also will supplement this with good old-fashioned Google research. There's a couple Python tools. There's even some AI tools we can use. For instance, we found that Grok is very good at building very specific lists. Now it doesn't do all the researching of contact information for you, but there's a way, again, usually through Data Axle and other databases that will pull the list. Our team does all the work. We don't outsource this. We understand that we're making a first impression on behalf of our clients. So we want to uphold the quality and quantity by keeping it all in-house. But what we'll do is we'll scrub the list. We'll research the owners of the list. We'll verify with a human eyeball every company we're reaching out to. Yes, it appears to be a fit. And then we employ a 7 touch point outreach process. It's a mixture of cold calls, cold emails, text messages, and then voicemail drops. We can make your phone ring for a third of a second and leave a customized pre-recorded voicemail. This outreach process is something we've honed in over years and years of working closely with a data analytics company to understand what are the best days, the best times of day, the best subject lines, the best content in the email, the best tone of voice to use to get through the secretary, and the language to use to get the owner comfortable on the phone to begin divulging information. So a couple things just to share. We always call right after a voice or right after an email within 24 hours. We refer back to the email. We get a ton of responses to that email saying, hey, heard your voicemail. I knew your email was legit. Because I get a lot of emails, but an email on its own wasn't differentiating. Number two, we know the best days to blast out emails are Tuesdays, Wednesdays, Thursdays. The best times of day, 8 to 9 a.m., 12 to 1 p.m., and 4 to 5 p.m. And frankly, the best time tends to be that 12 to 1. That has the shortest average delivery to open rate time frame. So those emails are being opened the quickest out of all of them. Again, there's a lot more that I could share with you about how we have honed in this process, but it has resulted in about an average 40% response rate to all the owners that we reach out to over a 2-week time frame with 7 touch points. Owners that do not respond are still followed up with, just at a much less aggressive cadence. And then immediately after we get a response, we are qualifying that owner. We are getting on the phone and grilling them for 60, 90, however long it takes in order to verify, yes, they check the boxes, the right size, the right EBITDA range. You know, oftentimes we have to educate the owner on the phone what EBITDA means and back them into what their EBITDA is, the right geography, the right type of business. And then to the best of our ability, there is a motivation to sell and a realisticness on price. If an owner says, yeah, I'll talk to your buyer, everything's for sale for the right price, or throws out a crazy kind of multiple or expectation, we do not waste our buyers' time with those people. So it is definitely a numbers game. Quickly from there, we'll make the introduction. We need to have focus criteria because if we don't, and the number one question we get from an owner when we reach out is, well, why are you interested in my specific business? If the answer is, well, you're any business anywhere in the United States at any time, we're not going to motivate them or get them excited. So it's got to be very focused. And honestly, the more focused, the more productive our team will be getting to, getting to the right businesses quicker. I talked about being persistent and efficient. You have to do a ton of outreach. You have to be professional, and then you have to make a ton of offers. And we found on average, it takes 6 letters of intent issued before we get one signed. And that doesn't mean to 6 unique different businesses. This includes renegotiating and resubmitting offers to the same business. But on average, it takes 6 IOIs. It also usually takes 1 failed LOI. And from start to finish, we usually take from engagement to close deal. It usually takes about 8 or so months. Happy to go a little bit deeper here. After we do the introductory call, we'll immediately request financials and work to get to an IOI. It's a common mistake I see is a lot of buyers get heavily focused. They put all their eggs in one basket going after one business, and that's great that they're that excited about it, but you really need to have multiple balls in the air at all times, because if for whatever reason that deal runs out and doesn't work, you don't want to be stuck back at square one with no leads to pursue. So couple ways we go after the proprietary search there.
Awesome. All right, let's go to the next slide here.
Yes, I'll try to be a little quicker here with our time. Persistence and efficiency. Number one, again, building your deal team. Most deal teams should have an M&A advisor, a financing partner. Obviously, you'll want to connect with the right financing partner relative to your criteria, and that's where Matthias and the Pioneer Capital team can come into play. You're going to want an attorney, and most deals of any material size, you're going to want to be prepared with your financial diligence provider. There's certainly different levels of QOVs or proofs of cash that you can do to make sure that you are checking all the boxes and sleeping well at night. You got to know your criteria. You have to be pretty focused. It's worth mentioning our team regularly assists buyers prior to any commitment to working with us, prior to any signed agreement, by taking in criteria, doing some research in those databases that I mentioned, and telling buyers, look, given your criteria, this is what the universe looks like. And we can help buyers understand how specific to be and ensure that they're set up for a successful search. Again, I talked about it. It takes on average 7 to 10 months. Average is about 8.5 months, 6 offers and 1 failed LOI. So you really have to keep your head up and be a little bit stubborn, because it's going to seem daunting at times. Some of the best deals have to be brought back to life a few times before they make it across the finish line. And then lastly, being human. One of the things, just as an example, that we do is we do a personalized video for every buyer that we work with, where that's one of the first things that's built right into our outreach campaigns. And it's one of the first things we share once we're making that introduction, so that the seller deeply understands this is not a private equity group. This is not some Joe Schmo that or he or she that is doing this part-time. This is a serious person that's committed to this and that's in paying us to go after and put them in touch with companies and owners like yourself. So there's a lot that goes into making this a mutually beneficial fit.
And one comment I just want to sprinkle in here. So the geography, size, and industry. So there's so Sam Rosati, who some people on this call may have heard of, has this saying called like the big 2, little 3. So basically industry, geography, and earning size. And what I typically tell buyers, and Sam, you may agree with this, is that you want to pick 2 of those variables. So like if staying in Michigan is very important, then maybe just pick earnings or industry, because the more specific you get, the harder it's going to be to find a prospective deal. And ultimately you might find it, but you could be searching for a super long time. Let me go to the next slide here.
Yeah, and one other comment actually there. Sorry, I'm being human. I don't know how many introductory calls I've been on where the maybe it's a private equity group or even a mistake individual buyers make, where they spend the first 10-15 minutes talking about themselves. I mean, again, this is mostly about building a relationship, which means listening, actively listening, and getting to know the owner. The more that you can get somebody to like you, this is as much about you selling yourself to them as it is learning about their business and ensuring it's a good fit for you. So it's a two-way street, and just sometimes the little tidbits of extracurriculars we stick into our marketing materials. For instance, we highlight a sports, certain sports interest or a certain hobby of one of our buyers. oftentimes you'll be surprised how much that might resonate with a certain seller, and that might be the initiative or the first thing that's talked about on an introductory call for numerous minutes, and we hit it off really well because we just randomly learned that both buyer and seller have an interest with a certain hobby. So just being human, being a little bit personable, will help separate you from those that do everything very transactionally.
And one more comment there too, as silly as this may sound, Sam, I don't know when you guys work with people, if you encourage them to set up like a search website, kind of with a background themselves, their family, and their criteria. In the SBA space, lots of people I work with, they'll set up a searcher kind of website. This is where I'm based. Here's a background of why I'm looking to search. This is kind of what I'm looking for. I tell people, put a picture of yourself and your family on your website. If you have a dog, include the dog in the picture. If you don't have a dog, go borrow your neighbor's dog. Because to your point, Sam, the more human you come across as, the more likable you'll ultimately be when you're speaking with potential sellers, and the easier time you're going to have getting a deal done. So pivoting to this slide here, so kind of weaving in the SBA financing to this. So getting one of these deals done is ultimately a process. And if you're working with Calder on a deal that needs SBA financing, and if we have happen to be working together at Pioneer, this is just kind of a high level of what to expect from the standpoint of timeline or process. So our process would kick off with an engagement letter that would basically acknowledge that myself and my team at Pioneer Capital Advisory would be helping you as a prospective buyer with going through the SBA financing process. It would explain that we would be building a deck for you that would basically have cash flow, source and use, background yourself, background the business that you're buying, background the industry, and kind of how all of those variables connect together. Once we have the engagement letter signed, we would send you an intake list that would basically have everything that we would need to get started. So it would be a request for items for you personally, resume, personal financial statement, something showing your credit score, and then also the financials for the business that you're buying, as well as the LOI. Within 2 business days from the time we have everything, we would get the deck built that we would use to pitch your deal to the banks that we work with. And then generally within 1 business week following that, if not sooner, we would start to get term sheets from the banks that we work with that we think the deal will ultimately be a good fit for. And then you as a client would decide which banks ultimately, or which bank you'd want to go into the financing process with. At that specific point, basically getting through the underwriting process to approval is generally about 3 to 4 weeks. And that depends on complexity of the deal. How it looks like there's a question here. What value would I get as a high finance professional using Pioneer? I would say the biggest thing, candidly, is the SBA market, Christian, is very fragmented. So each of these banks has different kind of strike zones of what types of financing criteria they have based on industries they want to lend to, debt service coverage, have the down payments capitalized, and things of that nature. And anecdotally, I've seen credit spreads between 25 basis points over prime to 300 basis points over prime. So knowing which banks to pitch your deal to faster to get better term sheets is pretty much the value proposition. And then helping you as a buyer be able to kind of differentiate between what is actually the bank requirement versus what's the SBA's requirement. So to get to an approval from the time you start underwriting, it's typically 3 weeks to a month. And then me and my team would basically be involved from the very start of the process all the way through to closing. And our model is getting paid by the bank at the very end. So we don't charge you as a buyer. And that's kind of how it works. But let's just go to the next slide here. Sam, I'll let you take back over.
Yes, great. And this is the last slide before we have questions. This we'll go into a little detail specifically how Pioneer was able to add value to this is a buyer. Again, we'll keep it confidential and not share any identifying information, but this is a buyer that worked with both Calder and Pioneer. This is an individual buyer. Also had definitely some. It was a gentleman. Definitely had some influence from his wife. It was a team effort from both of them. They had previous experience as or excuse me, the gentleman had previous experience as a CEO and had some great experiences. And unfortunately, had a bankruptcy in his past, which just made it a little bit added a little bit of fun to the process. But they engaged Calder at the tail end of 2023. We quickly, within a couple weeks, got them prepared. There's certain marketing materials that were drafted and perfected. The deal team was built out. The personal messaging was established, the differentiating factors, and we were off to the races. By the end of the engagement, we had introduced over 40 different owners that they had considered, and they had gone under LOI with a couple of them. They had gotten very, very close with more than 5 different companies. These are honestly kudos to the buyer for sticking with it, because like I said, this is not an easy process. But the types of companies that are listed were all good companies. I mean, the dock manufacturing company, a fire protection services, safety equipment distributor. Multiple times we sat in the same room and thought we were about to have a signed letter of intent, only to figure out that unfortunately it wasn't going to work out. It took up until about just after June. I think it was actually July of 24. So about 7-8 months later, where we connected with a business that at first the buyer passed on it. He didn't think that it was going to be a good fit. Actually, I'm sorry, he had passed on it a little bit earlier in the process as he was pursuing those other deals. And he kept an open mind. He said, I wasn't certain about this being a good fit for me, but I also wasn't certain, I didn't know how it could be a good fit, but I also wasn't certain it wasn't going to be a good fit. So thankfully he kept an open mind. He took an introductory call. He went and met with the owner. And after seeing the facility and chatting with the owner, that's when he realized, okay, this actually could be a great fit for me. And it was a marketing and advertising business. It actually ended up lining up pretty well with his skill set and his wife's skill set. It took several weeks of negotiation. We had to start very, very low, and we had to come up several times, which is always much preferred. And the strategy of being willing to negotiate, it's much more successful than just starting and holding firm, especially when you pursue off market. And then we connected him with Matthias and his team, because there was obviously some complexity with the buyer's background. Matthias, why don't you talk a little bit about just packaging that up and making sure that it was in front of the right financing partners?
Yeah, so for that deal specifically, I have to go back and kind of look at the debt coverage ratios, but essentially we were looking for a bank that was kind of local and knew the asset, or sorry, we were looking for a bank that could move fast. And it was kind of around the time where I think we're coming up around quarter end or just after. And so we put it in front of a bank that was a little bit more nimble in nature and a little bit kind of less national, and just one that was had kind of less formalities involved from the loan committee standpoint. And so basically we were able to get that. I want to say we got approved in a period of about 3 weeks from the onset of underwriting to commitment letter.
Which is really saying something, because at the beginning of the signed letter of intent, we were going after both business and real estate. But due to some environmental items that popped up in the real estate, we had to separate the two, simply because it was going to take longer to close in the real estate, and we did not want to delay the business closing. So yeah, there were certainly some hurdles, and thanks to the putting together the right package, making sure it's in front of the right lenders, and being extremely quick to answer questions, we were able to get through the financing process and get to approval, and ultimately close on the business. Again, not the business that the buyer originally even was going to consider. This took a little bit longer, frankly, than we had hoped and expected. I just showed a slide earlier. Most searches on average take somewhere between 8 to 8.5. This took a little over a year. But with the right process, with the right preparation, with the right team, we were able to make it a success at the end of the day.